Now starting the second video about the company analysis. As we understood about the company analysis that by doing a fund financial statement analysis like profit and loss account, balance sheet and cash flow statement, we understand, we calculate the ratios and we get a snapshot. Another important component of company analysis is SWOT analysis. In this SWOT analysis, it involves examination of firm's strengths, what are its weaknesses, opportunities and threats. So strengths and weaknesses deal with the company's internal liability. They are the internal ability. Okay, like a company's competitive advantage or disadvantages. Like company's advantage, let's take an example of the Apple. The company competitive advantage of the Apple is the premium quality, and its disadvantage is like a high price. Opportunities and threats deal with external situations and the factors the company is exposed to. Like opportunities include a favorable tax environment, favorable change in consumer preference. An example of threat is stringent government regulation or big-sized competitors of same technology. So, company analysis also involves analyzing its competitive strategies. A firm may follow a defensive strategy. A defensive strategy is one where the firm positions itself in such a way that its capabilities provide the best means to deflect the effect of competitive forces in the industry. Alternatively, a firm may follow an offensive strategy in which the firm attempts to use its strengths to affect the competitive forces in the industry. Now, let's talk about the third strategy that's given by the Michael Porter. Michael Porter suggests two major strategies like cost leadership and differentiation. The cost leadership, take the Walmart as an example. Cost leadership under this strategy, the firm seeks to be the low cost producer and hence the cost leader in this industry. So cost advantages vary from industry to industry. Now take the Apple as a differentiation strategy. On this strategy, the firm positions itself as a unique in the industries like iPhone 15 Pro Max, iPhone 14. They are positioning itself as a unique in the industry. Again, the possibilities of differentiation differ from industry to industry. So last but not the least, another very important component of a company analysis is understanding the business model of the company. As part of it, the following questions need to be asked. What does the company do and how does it do? Who are the consumers and why do customers buy those products and services? How does the company serve these customers? Almost all successful investors and fund managers repeat this thought that one must invest only in such firms where one understands the business. For again, I repeat it. Almost all successful investors and fund managers repeat this thought that one must invest only in such firms where one understands the business. So in the checklist for research, this is one of the most prominent questions. Do I understand the business? No. Analyst should move to the next question if he or she can't address what a company does in a line with preciseness and clarity. So there are over 5,000 companies listed on Indian exchanges. It is not possible to track and understand all of them. Investors should consider buying shares of few companies they understand rather than invest in a number of companies they don't understand. Further, each sector has its unique parameters for success, sales growth, and profitability. For retail sectors, footfalls and same store sales are important parameters. Whereas for banking, it is net interest income, net interest margin. For telecom, it is average revenue per user. And for hotels, it is average room tariffs and room occupancy, etc. And capacity. Analysts must possess an in-depth knowledge of these sectors while researching companies. Further, each company will have its unique way of doing business. The efficiency with which products and services are produced and delivered to the customers may vary from one business to another and will significantly impact its owner. Therefore, it becomes imperative for analysts to understand the entire business model of companies. So that's the second video about the SWOT analysis, and the Michael Porter cost cost leadership strategy and the differentiation strategy. Also, we have learned about the unique parameters. Okay, so this is the second video of the company analysis. So if you like it, then like and subscribe, and also don't forget to comment. Thank you.